Welcome to another episode of Making Risk Flow. And as I was reflecting on today's episode, I thought that as an industry, we often talk quite a lot about either the generalities of the challenges of the industry, or we kind of get very deep into kind of technical discussions about data technology. And almost in today's episode, I wanted to bridge both of them, right? And bring a guest with intimate knowledge of both the strategic future of the industry, but also how technology and data enables that transformation. But almost as importantly, somebody who's been in the trenches, right? I think often things seem easier from the outside, and today's guest has been there, led the transformation, been a senior executive in the industry. And I'm referring to James Platt, who brings an impressive background at that intersection of technology, strategy, and data. So, James, thank you so much for joining me today.
Well, look, thank you. And it has felt like I've been in the trenches quite a lot over the last few years with Aon. And I've just stepped out one now to actually start my own consulting business, Trimstone. So, but I still want to be in the trenches.
Absolutely. So you mentioned, you briefly touched on your Aon role. Can you give us an overview of kind of your background? You've done many different roles in many different places. So give us an overview of what you've done.
Sure. I started my career in the military. I don't know if I told you before, but I was a military engineer and then became a consultant, which I know for many of our listeners is probably a hated profession. But I spent quite a long while, 14 years at BCG. And then Aon was one of my clients. And I like what they're doing. I love the team at the time. With BCG, I'd been leading data and analytics for them globally and doing a lot of insurance work. And Aon said, come and join us, lead our data and analytics in the risk space and lead InPoint, our consulting business. So I did that for a while, and then actually it became clear in Aon that the challenges were how we changed ourselves. And I was lucky enough to work as COO there. And as you say, lead what I think was quite a great transformation, albeit with its challenges. It's always an ongoing thing. So lots and lots of mistakes, which I've hopefully begun to learn from. And then about a year ago, I left and have recently, as I founded a new consulting business because I feel the current consulting models probably don't give us all what we need. And we can think about how we support clients in different ways.
I'm probably leveraging that experience of having been in the industry for a number of years. And so both of us have been management consultants in the past. So almost like in the pure management consulting style, it starts top down, right? And almost start with kind of an overview of, in your perspective, what are the biggest challenges of the industry?
Can't believe you've admitted that we've both been management consultants before at rival firms. For me, in some level, the big issues for our industry are obvious. The biggest is cost. And, if we take $1 of our clients' money and we actually burn nearly half of that in the transactional costs. And I think that is hugely telling. And I think of all the issues, all the challenges, if we could reduce that significantly, we could perhaps tackle all the other issues. What I'd say on costs, though, is I think the combined ratio is probably the worst thing that ever happened to our industry. And there's a number of things wrong with it. One is it spreads cost over very dissimilar parts of people's books. And so it's taken a long time for us to understand cost properly. But the more I thought about it, Juan, and the more I looked at combined ratio, we're focused entirely wrongly on it. If you think about the combined ratio, most insurers I've worked with try and drive the loss ratio down. It seems a sensible thing to do. But if you look at it from a client point of view, it's entirely the wrong thing to do. Can you imagine saying to a client, well, it's great, now I only give you 40 cents back on your dollar. So we are driving the loss ratio the wrong way completely. And the reason, obviously, is that our expense ratios are too high. But imagine a world where we have an 80% loss ratio and a 15% expense ratio. And I'd love to come back to that a little later. But cost is to me, the biggest issue. If we could actually challenge our transaction costs, we would change. But service alongside cost, it takes hundreds of days to issue policies, hundreds of days to put out invoices. Cash reconciliation in many players is disastrous. And look, maybe our claims performance, I'd put a stronger on. We've focused on that, I think, as an industry. I actually think our claim performance is better. And then lastly, all issues that everybody knows, relevance. As we've moved from this world of going back 50 years to physical assets to intangible assets, we have not followed. And whether it's cyber or reputation, our ability to protect intangible assets, close the catastrophe gap, and I always cheer, I think it's 1983, which is the year where we had the highest relevance and if you measure it in terms of insured losses as a percentage of GDP. So 83 was a highlight for the insurance industry. But I'd say overall, there's a great quote by Oscar Wilde, and he says the cynic, and I'd put the insurance industry, is in danger of becoming that cynic, knowing the price of everything and the value of nothing.
I really like your controversial statement on the combined ratio, right? Because it almost feels like we've just accepted that the industry is inefficient, which is the expense ratio, right? And said, okay, well, the only thing left then is loss ratio. But I think I really like your perspective from a client perspective, we're almost focusing on the wrong thing, right? The customer wants a kind of transfer the risk effectively and then give me back as much money as possible as an industry in claims. So almost as we think, okay, that's a fantastic summary of your view on the challenges. The first step to then try to solve it is understand why is that the case, right? Why are we in this situation?
I think this calls for us to look at us compared to other industries to understand why. And maybe if you can bear with me, I do two analogies, which are both, I think, are relevant. If I went back to the 90s and I look at what I thought was the most analogous process, it was mortgage applications. My wife started her career in banks doing mortgages. So I knew the pain in the 90s of doing mortgages. Hugely complex process, lots of stakeholders, paper moving around. You have to make decisions. In terms of the mortgages, that was the bank manager at the time. It looks really similar to commercial insurance. But if you look today where a mortgage process is, it's digitized. It's almost instant. You get a result very, very quickly. Your experience today is massively different from the 90s. You look at commercial insurance, and it looks pretty much the same, which starts to say, hey, why do we have a cost and service problem? But there's maybe one industry that I think we can learn from. And it's certainly not a paragon of virtue and something that people would say, but if you step back and think about the asset management business and the progress they have made. So you just go back, and I've looked at this and looked at some of the numbers, and I think they're stark. You go back to asset management in 2000. This is a 7% return business, roughly over time, if you talk equities. And the cost of the consumer investing in equities in 2000 was broadly, you'd be paying about 3 percentage points. Today, the return, you can argue, is up or down. I'm certainly looking forward, but the return's about probably 7%. The cost of investing in equities today in asset management, somewhere probably, depending on your portfolio and your willingness to have passive, 0.5 to 1%, a 70% reduction in costs. Right? Imagine, go back to my thing about the combined ratio. Imagine we'd done the same thing in that period, then we would have an 80% loss ratio and a 15% expense ratio. So they have done it, and we haven't done it. And you've got to say, well, what did they do? And then you reflect those against insurance. So first of all, they standardized products. Are our products standard? No. They consolidated massively across large parts of that industry to generate scale. Have we consolidated massively? No. they brought in new technologies that really did impact expenses. If you look at asset managers' expense ratio over the last 20 years, they've halved from efficiency, from expensive. But then they did a couple of other things. They moved to platforms for distribution purposes. So suddenly distribution costs fell down and advice became something that you needed to pay for if you really wanted it. And then they shift from active to passive type investments. I would make that slightly analogous to portfolio versus individual risk underwriting. The combination of that reduced cost by 70%. If asset management can do it, why can't we do it? And what's fascinating about insurance, I should come on to mention some issues, but insurance can be innovative. I laugh about the insurtechs, Juan, because everybody acts like, oh my word, all this stuff coming out of Silicon Valley. It's really interesting. What about Cardiff? More innovation, I think, has happened in the UK motor insurance market than almost any other digital play. The emergence of Direct Line, originally on the phone, the aggregators, Hastings, Admiral, how they change models, how they digitize. So insurance can be innovative, but we haven't cracked it at all. Even asset management has.
But I think that then that takes me to when you use this type of analogies, you think about, okay, similar or adjacent industries have done it. Why haven't we, right? And there's so many similarities. There needs to be something that is different about insurance, right? And I think you mentioned a couple of drivers. It's about standardization of product. We haven't done it. Consolidation, we haven't done it. Distribution. So what's your hypothesis of, first of all, why? And second of all, will we ever?
Well, yeah, one good question. It's easy to find issues, but harder to somehow solve them. So if you look at the difference, and I've spent quite a lot of time thinking about, well, why is it proven so difficult? Because it's pretty embarrassing that our expense ratios look like they did in the 90s. It's pretty embarrassing. So first of all, I think it comes down to maybe two things. One of them is Darwin. And I think if you look at banks and how they've improved, any individual bank improving its mortgage processes got the benefit, and therefore directly was able to benefit from improving their technology, making the process faster, and beat the competition. If you compare that to insurance, that hasn't really been the case. If you improved your processes, the end-to-end was still equally difficult because you live in an ecosystem that the banks haven't had to deal with, not the same way that we do. And so I think the fact that the end-to-end, to make a real difference, it's lots of players, that's really held us back and made it more tricky. And if you look at asset management, not only have they had competition, I think the regulators have also driven a lot of that change because it's very much, I've talked about a consumer-focused market. And I think we have been somewhat shielded. If you really, really looked at it and said, the amount we're taking, I think at some point regulation probably will. But those two things together, Darwin being at work, not having an ecosystem, and some heavy pushes from regulators made a big difference to them. But the exciting bit is I think it is shifting. I think, we talk a lot about generative AI, and I'm sure we can come on to it and how it's going to change things. But what it's meant to me is that you can now get real gains changing your bit of the ecosystem, and it's easier to do than it was before. I think the client pressure now has shifted. If I'm a client, I'm looking at my personal life and what I do, and the fact that I can do my grocery shopping online, the fact that, and it's really simple, my banking's online and quick and convenient, my mortgage process is instant. I'm getting my asset management done on platforms. And I come back to my world in insurance, and it's not. And now I'm saying, well, that's just not acceptable. And the client pressure, so I think service is, and the need to drive service is really gonna put pressure on us to change as an industry. But last thing I'd say though is it's very easy for me to sit here and go, this is already easy. Matching risk to capital is not an easy task. It is not really like mortgage applications. I know that. But I don't think doing asset management is easy either. But, there are some nuances that we do have to overcome.
Yeah, because that was exactly what I was thinking as you were describing it, right? So at least the mortgage example, I'm sure I'm not doing justice to the mortgage industry, but I would think it's a simpler product, right? At the end is you
Yes.
want money to be able to pay your house, and the bank needs to assess the risk of you defaulting, type of thing, right? So whereas if you look at especially like mid-market and large commercial insurance, the risk has many more facets. So, and I guess to prove my point, if you look at the more commoditized segments of insurance, right? So like car insurance, home insurance, where the products are more standard and it's easier to understand the risk. That's happened. So,
Yes.
so I guess just to make it do justice to the industry, right? I think there's some reason why it's moved probably slower, but so I think perhaps we can talk about, okay, in a world where the product's slightly more complex, what should we do?
Yeah, no. Well, I think it's a fair pushback, and it's very easy to not think. You're saying that, to your point, there are parts, personal lines, motor in the UK, where there's been huge innovation and improvement. So, yes, at some level, I think, what do we do? Well, if the definition of insanity is doing the same things over and over again and expecting a different answer, it's not what we've been doing. I mean, I think that's clear to me. You can't keep doing the same thing. And a bit like the issues, I think the levers you need to pull are somewhat obvious. The real challenge is twofold: is how do you pull them, and then how do you actually make that happen? Because the levers to me are data, digitization, and decisioning. They're key levers. Everybody knows what they are. But the challenge for us is doing that together and doing that in an ecosystem. It's interesting. I've listened to a number of the podcasts that you put out before, and these topics, actually, you have covered a number of them in quite a lot of detail. So I'll try not to just repeat other people's podcasts, which I could do. But let me maybe just go through them and sort of give you my take on those. Data is, all our industry does. It's really funny, right? All our industry does is move data around and create documents on the top of it. And if you look at it that way, it really is all we do. Yet we're bad at moving data around, and we're bad at it because we don't have and really adhere to common standards. And you had Clive Busnell on here a little while ago, I think, talking about the need to create a small amount of common data that we all use, and then accepting that the data around that will never be fully connected, etc. I listen to that. I totally agree with that way of thinking about it. But we together have to define that core and have to use it. You compare this to banking again. They move a lot of data around through their transactions. They have a common system. If you want to go to a Canadian bank, it's a common system. It's very clear. There's no losses. It's absolutely clear. You try and do the same thing in insurance, it's not clear. We have allowed that to happen, as a set of different players. So, look, the work that's being done in Lloyd's now, their new blueprint will help in Lloyd's, but is that going to follow around the rest of the world? Because it has to. We're an international business. So, but Clive covered that in a lot of detail. I think the one thing I'd add is, I think, again, generative AI allows us to bring in lots of data. If you can get that core right, generative AI allows us to think about data and deal with fuzziness in a way that we never could before. And that's, to me, quite exciting. Second step, and obviously you know a little bit about that, I should say. Second step is digitizing our processes. The cost of doing this historically was huge. No code, low code, to me, I think changes the cost of digitization for us dramatically if people accept it and bring it in. So I actually think digitization has become a much, much lower cost activity. But the third bit is really the answer to me, is how we decision. And I think we have to look at ourselves closely and look, it's easy. As an intermediary, I'm always going to not underwriters. So it's easy to say, it's all about risk decisioning. Actually, I think decisioning and underwriting is a cost that we don't need to bear. I look at it a bit like, how often when do you use a MacBook? I started using SatNav a while ago. I accepted that maybe SatNav could make decisions better than me when it came to finding routes. Clearly, needs a bit of oversight. I have to put in where I want to go and I have to tell it information, but I still think I prefer that to go back to a map book. I struggle that we really feel we need as many people today as we do to do this activity. And I think you go back to asset management and you ask yourself about active versus passive and what's our equivalent and how do we do this? So that's one area. I know it's a sensitive area, but I think we've got to look at it really carefully. But the one that's the real unlock is more an intermediary issue, but it's an everyone issue, which is how we match the risk to the capital and the process for doing that. And I think our value chain is brilliant, but I think it was designed for a period where we had no data. It was designed for a period where you had to spread risk against many players to manage everybody's risk, but you didn't know a lot. So you took a bit, you passed some on. You passed it on through intermediaries and they passed it on to another risk carrier, and that sort of worked the value chain. It's highly expensive to run. There are many, many mouths to feed along that value chain. I think anybody looking at how it works today would say that is not efficient. Mm-hmm. And what we tend to do is create more intermediaries. You know, suddenly we have the MGA world popping up. Now, MGA has a lot of value to add in certain areas, but it's another link in the chain. Retail, wholesale brokers, reinsurance brokers, multiple carriers. Couldn't we just find a way of understanding a risk, breaking it into pieces and giving it to the capital it needs? Now, the capital would have to tell us what it needed, which can't be somebody going, I like that and I don't like that. You'd have to actually do that in a more systematic way. So this is certainly not just brokers, this is everybody. But I do think if you got that right, you could take 20 to 25% out of our transaction costs, which is obviously massive. And then that would allow us to have better service, and that would allow us to tackle some of the risks that we struggle today because our costs are too high.
It's funny that you mentioned the number of steps in the value chain, because I think that is something that those of us who come from other industries and eventually join insurance, that's one of the things that took me the longest to even understand, really, from to take the US risk all the way. I mean, like, how many steps there are there? Is it the retail broker, and the wholesale broker, and the London market broker, and the insurer, and to your point, the reinsurance broker, the reinsurer, the retro. So, and in each of those steps, obviously, I mean, they need to survive, right? So there's commissioning for each of those. There's a total rekeying of data. Each of them have a different way of defining risk. So one of the things I was thinking, so you mentioned, obviously, standardization of data, which I'm a huge believer. I just wish that had happened many years ago. But at the same time, to be honest, I'm becoming more skeptical about our ability to do it. Mm-hmm. Right? Because, again, going back to the point about how many players there are in the value chain, you need every player to adapt those standards. We know in insurance, it sounds easier said than done. Adapting standards really means an insurer or a broker changing legacy systems and investing money in technology. At the end, you're going to almost like drive efficiencies through the standardization, but you're going to add a lot of cost in systems to be able to adapt to those standards. So it's, to me, slightly less clear how long would it take the industry to actually kind of adopt standards end to end. And almost I'm thinking now, especially kind of with Gen AI and large language models, should we even, I mean, isn't there, this is one of those problems, but is it more efficient to tackle the problem or to like drive standardization, or is it nowadays better to just leave it as is and use technology to overcome the efficiency challenges?
No, look, well, I think that challenge is a great one. And I think that Gen AI allows us to tackle it in a way that we couldn't before. I mean, to your point, I mean, and it may make an excuse not to. I think, however you think about it, though, so we need to create end-to-end systems that are more efficient. And you're right, the idea of common data that runs across our whole industry, it's never happened so far. And actually, to your point, Gen AI actually makes it almost less likely because now maybe you don't need to.
Exactly.
And that, I think that's a very, very fair challenge. And look, I don't have a perfect answer, but I do suspect that there will be some players come along that that start to think about capital and risk matching in new ways. I think some of the large intermediaries which own the client relationship will come under severe client pressure. And I think that will make them start to think about the end-to-end, going back to this, let's increase loss ratio and reduce expense ratio. And I think that will force some different behaviors across the industry, because, you know, whoever cracks this and is willing to really revolutionize and really offer that back to clients in different ways will force big change. And, you know, maybe regulators will look at it as well. But no, it's a great charge.
Yeah, I think it's, I mean, to some extent, I was playing a bit of devil's advocate, right? But or just thinking about, are we trying to solve it in the traditional way of solving this type of challenge, or is there a better way? And only I think history will tell what's going to be the right. But I think I guess your core concepts about simplifying the value chain, right, and streamlining it so that at the end the client is not paying for 20 handovers or handoffs
Yes.
from one player to another. I think
it sort of says, right, it says simpler value chain, more complex transaction. And in some ways, you know, AI and some of the tools are set up to maybe do that in new ways. But yeah, you've got to make the capital, you've got to make the risk provider understand what parts, what volatility, what correlations, et cetera, of the risk is wanted, and then play it back. And so this is certainly complicated, and it comes back to your point around why mortgage processes might be good today and insurance hasn't quite got there.
so. We've talked about the perspective of the whole value chain, right? But then if we go almost now one level down, which is what is the role of individual broker or insurer? Like, how should they be going about this, right? And obviously you've been a COO before. What would be the tips on how individual players should be thinking about it?
So when I was interested, I spent a lot of time trying to think around this, both as a COO, but also different times of consultants to other businesses over the years. And I think what is changed now is how you get scale and how you build speed and create technology change cheaply enough. And in the past, you tended to get scale, you tend to try and build scale internally in technology. I'm talking big organizations now. Maybe little organizations or smaller organizations have always been more nimble, have always done it this way. But large organizations would really try and centralize, would have large technology teams, or would bring in large technology providers and would try and generate scale internally. Technology was pretty well understood, and they would build these monolithic platforms, which frankly, as we all know, were extremely painful to put in place and never quite got to what they wanted to do. What's interesting now to me is, A, the new technologies we have and the speed of development of them means there's no way you're going to do that internally. There's no way you're going to do the speed of learning you need to do, because you don't really know what's going to work and what's not going to work. You need to get the scale and you need to get the learning from outside, i.e. you need to work with faster, nimbler organizations, by the way, many of which will have failed, but the ones you'll try and work with are the ones that didn't fail. So they've already done the learning. And if you can find a way to bring them in and to deploy their technologies and to integrate those technologies, I think you have a much, much quicker, faster, lower cost way to change and drive. And the beauty, again, is going back to things like low code, no code, generative AI. I think you can integrate in ways you never could before. And I think you can bring these things in ways you never could before. So that's the mindset. I mean, I think that's where you've got to go. And I look at some of the remarkable firms that are out there at the moment providing some of these capabilities. But to one story just from internally of us trying to change, right? So I won't say exactly who, but we decided a few years ago that we wanted to bring in a digital insurance capability. We felt that we couldn't build it fast enough. There were firms out there that had this digital insurance capability. And I got introduced to the CEO of one and was impressed by what they were doing. and thought, I'll partner with them. And we'll bring them into Australia, we'll put them in the US, and we'll start to use this firm and partner with them. And the second you do that in a large corporate, you start worrying. You start worrying about, well, hold on a second, what if they run off from us and they go to our major competitors and they take all the IP that we've built together? What if they collapse and fail? And we'd had problems previously with smaller firms that had failed. How can I be sure how can I really trust this small firm to deliver this thing? We're a big firm. They won't have the capabilities. Those are really good questions, and they're not easy ones to answer. Our solution was buy the firm. It was the only solution we could find. I remember talking to them. The only thing I can think of, we want to work together, is we need to acquire you. And we did. And it was pretty successful in many ways. But you can't always buy the firm. So there are a bunch of issues that aren't technology, which are real around risk and around complexity and confidence and commercial confidence that you need to solve if you're going to use these firms. So, I don't have the perfect answers here. In fact, most of the stuff I've done I've gone wrong as much as it's ever gone right. But I do think it's the only way you're going to deal with these new technologies.
I'm now curious. Is that company one with a Spanish founder?
It may have had a Spanish founder. Right.
Okay, we'll leave it.
Yeah. No, I mean, having to deal with Spanish founders is obviously tricky. No, they're an impressive organization, but it was challenging.
So a couple of thoughts to build on what you just said, right? So one is, so you're an advocate of bringing external help, not trying to deploy monolithic solutions to solve everything, but like start almost like dividing and conquer, right? And saying, let's bring different partners for different parts of the value chain. And that is something that I talk quite often with clients. And I guess two questions on that. One is, how do you structure that program of change, right? Because you need somehow a target state and a target vision, but they almost start somewhere. And related to that is, where do you start? Yeah, would love to hear your thoughts on those two.
Well, look, I mean, I think the one thing is you do it. And the starting point, at least for us as we started to think about this, and I don't want to pretend that I'd solved this in my prior life, I certainly haven't. But funny, if you come back all the way to data, if you want to make this work, you have to have a strong view on data internally, because you've got to integrate to something. And if you're not integrating, if you like, into technology, you're integrating really into the data. If you have a strong data foundation, clarity on at least your own data. We talked about industry data before and how hard, but if you don't do that internally and have the same data structures, at least in the core everywhere, and you haven't thought about how to move that data around, it's very hard to integrate anybody. I mean, that to me is part of the starting point, is really thinking about, to your point, how's your architecture, how's your firm going to bring these other organizations in and do it in a way that is easy. And because, of course, the beautiful thing now is that actual API technology, et cetera, is progressing massively. And so if you've got that strong data foundation, it's actually quite easy to integrate into it. And you can integrate legacy and the new world together around that data. It's always fascinating, Juan, the one thing for me that is, I think every leader, myself included, has a view of technology 10 years back. It's very hard to have a view of technology today, right? Because you always imagine the projects that went wrong, and most of us have about a 10-year life cycle. And so, I think what's possible now is pretty amazing, but we're all still looking back 10 years that it was difficult. But the other part on starting is people. And what makes our industry, I think, wonderful, and maybe people, after having this podcast, maybe it's wrong, because it's sort of about, hey, we can replace people with technology, but it's the people. And whether that's an underwriter, a broker, an actuary, whoever, right, a technologist. And I think the barriers to really doing a lot of this are natural. They're natural change barriers. There's a great book out there, if anybody ever wants to read, called Uncommon Service. And it talks about the importance of people in an organization who can get stuff done. When you have a difficult organization, you have this person alongside of you who can always get that invoice through the system. can, get the document out on time. And really, these are what I would call service heroes. They're the people that that can go in and do it. They're a disaster in most organizations because they're not replicable, they're not scalable, they don't scale. So in many people don't want to change. I tried to get rid of a lot of these types of people. We had a name for them called them account specialists. They're phenomenal people getting things done. People who don't want to let go of them because they're the only way you can get stuff done. But if you don't get rid of them, or at least bring them together in different ways, you can't scale. So natural change barriers is what I'm trying to get at. But I think if we think about change, the current two systems, neither of them works. One's program-based change in an organization. You build a plan, you deliver the plan, you treat people as stakeholders to get them on board for your big plan that you're going to deliver. I mean, we've proven pretty well that stuff doesn't work very well. And so everyone says, no, it's great, it's great. We're going to do agile product-based change. We're going to create a lot of features. We're going to have metrics that we're going to work against. And frankly, if you've got a big technology platform, that works pretty well. In a people-based business, it doesn't. And you go, well, that's both the main methods of change. What are we going to do? Look, there's no easy answer, but I think if you start with people and their objectives, you have a great chance of driving change. And how do you motivate people to do it? One of the things that I was always keen on when we were transforming parts of it, or at least building what we call business services, I wanted people to feel good. And so we banned the term back office, because who wants to be called back office, right? It's a terrible term, right? It makes it sound like people are back. Actually, the people in the back office of most firms, Juan, are serving clients every day. They're the people getting the documents out. They're the front of the firm, but they're called back office. I hate it. But objectives, starting with people's objectives. Look, the last story, maybe I'll tell you. You're going to tell me to stop fairly soon. You've heard too much from me. But is the best thing I think I ever did in at least my recent working life, my memorable working life, was we were, and deep in COVID, we decided that we'd run an innovation Olympics. And everybody in my team, every leader, everyone thought I was mad for doing this innovation Olympics. It's COVID, it's really tough. People just need to be. And I'd run one as well before, and it'd been a bit of a disaster because you had 6,000 great ideas and one winner. And so 5,199 upset people that they didn't win. So we called it Olympics, because we thought we'd have a lot of winners, because what we tried to do was to enable teams, and we got people to come up with their own ideas. We gave them support, we gave them training, we gave them coaching, and we gave them agency and to deliver against their own objectives. And across about 12,000 colleagues who could take part, we had about 200 teams, maybe 10 a team, so maybe a couple of thousand colleagues involved. When I left the firm, I got messages, not about, by the way, sadly, not about how great a leader I was. I wish I did. But I got people saying, we really like the Innovation Olympics. It was the best thing we ever did. So, but to me, that was just this point around, if you want to drive change, you've got to get people engaged around their objectives and delivering them. And if you can do that, you can cut through a lot.
Well, that is a great example of leaving a legacy, right? So definitely you should be proud of that. And just bringing a number of the things you just mentioned, which is absolutely fascinating together. You've talked about focusing change on what actually is helping people and getting people on board. You've talked about the challenges of data flows. So almost, and this is something that we see more and more, obviously, insurers focusing on, is would a good place to start making change, thinking about, okay, what are the activities humans are doing today to do data transformation, but that activities that they hate, right? That they are not providing much value. It's just a necessary evil. And start bringing Gen AI in to start remote. So almost, if you start there, which is digitizing the data and workflows up front, does it deliver on a number of the objectives you've described?
So Juan, look, I mean, I think what you're describing or what you're saying, I think is absolutely spot on. I think it's amazing, isn't it, that we bring in these new systems, or we have them for years, these great digital systems, CRM, or a new data entry system, or a new thing that's going to make your life wonderful. And then we ask people to use it. And suddenly that means a couple of things. It means we've got to train them on that system. It means, because they oddly enough aren't always intuitive, it means that they've got to type information into the system, right? Which I've not met anybody who likes doing that ever, pretty much. And it's interesting in most organizations that how many times do you find the senior executives really using those systems themselves? They don't. Why not? Because they have a choice. So they don't use them themselves. They're very happy to have them. So to your point, to me, if you can take away the burden of having to actually input data particularly, and generative AI, I think, gives us a chance to do this. We can input data from anything now. We don't need to. People want the value of a system. They hate putting stuff in. So to your point, I think there's a stack of tasks that you can go about now going after really, really quickly. But you have, I mean, as much as we pretend, people generally don't like workplace digital systems, strangely enough.
That is a fantastic last message to wrap up the episode, James. It's always a pleasure. I think I opened up the episode mentioning that you bring this absolutely incredible kind of intersection of strategic perspective with down to earth, like how do you make change happen? And I think the last 30, 40 minutes have been a fantastic reflection of that. So all I can say is thank you so much for having joined me.
Well, thank you, Juan, and genuinely, I'm serious. Can we get our transactional cost down at 15%, right? Let's all put our shoulder behind doing that, and I think we'll be amazed what we can achieve. But thank you for inviting me.
Thank you, James.